And in our top business story, average residential rents in Abu Dhabi dropped 2% quarter on quarter at the end of September as job losses and a softening economy took their toll on the market. According to CBRE's Abu Dhabi Market View for the third quarter of 2016, average housing rentals continued to decline amid economic uncertainty and a weak employment market, with a quarterly drop taking the total year-on-year decline to date to 5%. Luxury residences within master-planned communities were particularly hard hit, witnessing an average rental drop of 3 to 5% over the last quarter, while CBRE said smaller and more affordable units have held up. CBRE's market report found that office rentals also continued to slide due to weakened demand and ongoing downsizing operations by corporate tenants. Secondary office rentals dropped by 2% in the third quarter, translating to a 9% decline compared to the same period last year. The trend, according to CBRE, has been accentuated by a development pipeline heavily orientated towards inferior quality products and locations, while noting that Grade A office rents were more stable over the quarter. Dubai's Emaar Malls have reported a 16% rise in third quarter net profit on Sunday. The Malls division revealed in a bourse statement that it's posted a net profit of 435 million dirhams in the 3 months to September 30th, compared with a profit of 376 million dirhams in the same period a year earlier. Quarterly revenue was 774 million dirhams, up 8% on a year earlier. Emaar said its occupancy levels across all retail assets averaged at 96% during the first 9 months of 2016, similar to the levels last year. Earlier this year, Emaar Malls distributed a cash dividend of 10% of the share capital, equivalent to 1.3 billion dirhams, setting a new benchmark in value creation for the company's shareholders. Emaar is currently expanding the Dubai Mall's Fashion Avenue by another 1 million square feet, built-up area for high-end luxury and high street brands, with an added 150 retail stores opening as part of the expansion. Emaar Malls said its other assets, including Dubai Marina Mall, Souk Al Bahar, and Golden Diamond Park, also recorded positive growth. Following the opening of the Ranches Souk in Arabian Ranches 2, Emaar is currently rolling out the souk at the Meadows and the Springs, with a future retail addition at the Springs Village set to add over 245,000 square feet gross leasable area. And visitors to Dubai are by far the highest spending tourists in the world, splashing out nearly twice the average of 11 other major cities around the world, including New York and London. Seville's latest 12 cities report found that around 901 million domestic and overseas visitors were attracted to the 12 cities examined during 2015, spending a total of 1.05 billion nights in hotels or other accommodation. Instead, average accommodation costs per stay were the highest in Dubai at $553 per person, while Shanghai was the cheapest option of the 12 cities covered at $173 per person. The research also showed that overseas visitors who had an overnight stay in Dubai spent an estimated $4.7 billion in restaurants and cafes. In terms of spending on retail, this figure reaches $9.7 billion, which dwarfs the total amount spent in the 11 other global cities measured, with Dubai ahead of London, New York, Tokyo, and Paris. The fourth edition of the two-day Hong Kong Trade Development Council Lifestyle Expo kicked off in Dubai on Sunday, featuring a wide range of stylish products from over 100 Hong Kong and mainland companies. Organized by the HKTDC and the Department of Commerce of Guangdong Province, the Lifestyle Expo is supported by the UAE Ministry of Economy and aims to highlight the importance of the Belt and Road Initiative and the immense opportunities presented for Hong Kong and Dubai. According to the organizers, Hong Kong and the HKTDC's engagement with the Middle East are set to deepen further as a new 21st century model for globalization emerges, a model that takes its cue from the ancient Silk Road and is driven by the new Belt and Road Initiative. The China-led Belt and Road Initiative covers more than 60 countries, spanning Asia, the Middle East, Africa, and Europe. It represents a huge market of about 4.4 billion potential consumers and accounts for over 35% of global merchandise trade. During the event, a memorandum of understanding between the Ministry of Economy and Hong Kong Trade Development Council was signed to promote trade investment, entrepreneurship, and small and medium-sized enterprise cooperation between Hong Kong and the UAE. Under the Memorandum of Understanding, Hong Kong and the UAE will foster closer cooperation on the initiative and encourage UAE companies to participate in related activities.
The aim of this Hong Kong high-level business delegation to UAE is to explore mutual business cooperation under the China's initiative called One Belt, One Road. I think for the One Belt, One Road, I want to explain that China has recently advocated a very good plan. It's called the One Belt, One Road, aiming to connect all those over 65 countries along the land and the sea Silk Road from Asia to Central China, India, through Middle East, Africa to Europe. I think this is a very, very good initiative because it can, together, we can unite all the business opportunities among the 65 membership countries along this Belt and Road Initiative. In this regard, Hong Kong and UAE are especially important because both are treated as a strategic hub centers along these Belt and Road countries.